Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today.
All right, we're going to get started today. Hello, everyone. Thanks for joining us for our webinar, Fintech Solutions Improving Healthcare. I'm Jennifer Thomas. I'm Managing Director of Plug and Play Health, and we're going to have an information-packed session for you today. So let's get right to the agenda. I'll give you a little bit of context about Plug and Play in a second, and then we'll have an informative kind of macro view of some of the activity and trends in the Fintech solution space by my colleague Andres Carbonell, who's a ventures analyst with Plug and Play. And then next up, we'll be having an engaging conversation with 3 startups that we've handpicked for you who are working to make healthcare more accessible and more affordable. So you'll hear from Brella, PG Patients, and Wallet. And of course, we have lots of time for your questions, so please be sure to put them in the chat or the Q&A box during the panel discussion, and we'll definitely get to them. So to give you a little bit of context on Plug and Play, for those of you who may not know us, we are headquartered in Silicon Valley. What we do across the company and across the globe is to connect the world's best startups with our national and corporate partners, and we help them bring technology and innovation to market faster. We do this in almost every industry worldwide. When it comes to healthcare, we're specifically connecting solutions to corporate partners to help them make healthcare more accessible, to improve the patient experience and outcomes, and to make healthcare more affordable. So we're an investor. We help corporations find innovative solutions, and we also accelerate startups. And these 3 components give us a very unique view into the market trends, the issues that are happening, and the new solutions that are popping up. In healthcare, we serve 42 corporations worldwide, from hospitals to life science companies, industry and government, and we've invested in over 130 health startups. So let's get to it right now. I'm going to pass it over to my colleague Andres Carbonell, and who will give you this macro view of the fintech solutions in this space.
Thanks, Jennifer, and hi, everyone. My name is Andres. I'm a pharmacist and MBA by training. I have developed my career in startups both in Europe and in the US. Worked at Genentech in South San Francisco for several years in clinical operations, and prior to joining Plug and Play, I invested in a retail pharmacy back in Spain, where I spent 3 years growing the business. So let's get into what is important today. Many of us here have probably heard someone talk about the analogies between financial services and healthcare. They share massive regulated markets with technological adoption challenges, legacy oligopolies, and tons of customer pain. But they also present opportunities at the data and infrastructure layer, as well as in the new B2C and B2B products. But most of the wildly successful fintech companies haven't done much in the healthcare sector. And some of us ask why. Well, the third-party payer peculiarity and obscure regulation dynamics don't make the healthcare market an easy one for generalist companies to go after. But this creates opportunity for healthcare-specific fintech companies to conquer their space while leveraging lessons learned from general fintech. But what are the pressing pain points that vertical-specific fintechs should be addressing? Well, one way of answering the question is to look at the heart of the healthcare financial services and unbundle their components to identify opportunities for substantial improvements in the areas of unmet needs. And this is what I've tried to do in these slides. The fintech, so in the recent years, we've seen more blends across payers and providers. giving rise to the term payviders. Despite the financial success of and the scale of these payviders, there are opportunities to outperform them in experience, performance, and cost structure. So I'm going to focus on these core components where we are seeing startups already driving innovation, some of them with us today. So let's start with the insurance products. Here is where the bulk of payvider revenues come from, including Medicare, Medicaid, employer and individual health plans. Despite the prevalence, the legacy insurance products are far from consumer-centric or user-friendly. Something that signals this is the average NPS among the 6 main payviders is a weak 9 out of 100. And the experience of healthcare providers with these insurance companies is typically equally dull. So really successful modern health insurance businesses will most likely be focused on value-based care delivery while having strong clinical muscle to drive unit economics. At the same time, tech-first approaches have the opportunity to create significant leverage by lowering costs via automation of administrative tasks and enabling more efficient providers and more member engagement. If we move a little bit south to the platform service and insurance overlap, most payviders also offer a suite of commodified platform services to other payers and providers in the market. For instance, outsourced underwriting, claims processing, and provider network leasing. Many of the platform services offered by the legacy payviders are dependent on human labor and also lack transparency and modularity for configuration. So what this means is that digital native companies have a leg up here in terms of being able to drive SaaS-like margins on their platform offerings. In turn, tech-enabled approaches to direct contracts, real-time payments, and closed-loop referrals have the potential to significantly improve both unit economics and quality of experience for their end users. And finally, moving to care delivery, big payviders have integrated care delivery services into their structure, which provides them great control over medical cost and diversification beyond traditional insurance margin streams. This creates a fintech opportunity for financial services integrated into provider groups, whether related to driving higher yield on collections or enabling value-based contracting with payers. So we see quite some startups. We see quite a few startups already innovating in these areas. But what are the latest trends that could happen in this fintech, health tech interface? So in the next slide, I will talk about emerging spaces. So there are emerging spaces where legacy providers do not offer purpose-built solutions and that are ripe for startup-driven innovation. This exists where novel businesses and risk-bearing models are gaining adoption or where customers are driving new purchasing behaviors due to their increasing role as payers themselves. We see the healthcare data explosion, which is fueling the transition to value-based care, financial platforms for healthcare affordability and reduction friction, so buy now, pay later, or the individual care health reimbursement arrangement. And finally, gamifying consumer wellness to combat the rise of chronic illness is also starting to gain some traction. So if we move to the next slide, what I've done is a little market map with some of the startups operating in these areas. We have marketplaces with integrated fintechs, companies like Alma or Sesame. We have modern third-party administrators like Cedar or Payson. Companies enabling revenue for providers like HouseRx or Topography Health, and portable healthcare coverage like Take Command Health. But I'm sure we will hear more about these trends and what we can expect in the future from our speakers in the roundtable. So I'm just going to dive deeper into a few of these companies. Just a couple of examples. Baseline, for example, is the best-in-class fitness reward platform and innovation financial ecosystem. They've partnered with big players like Nike, Adidas, Lululemon. Betterfly is a recent LATAM unicorn who recently moved to Europe via acquiring a Spanish startup, and it's continuing to grow. Headway, for example, has partnerships with the biggest players, Aetna, Cigna, United Healthcare, Oscar, and Oxford. And Clarify, which is leading the cloud analytics and value statement platform, recently won the 2022 MedTech Breakthrough Award for its healthcare and data analytics value-based platform. So we have seen, if we move to the next slide, we have seen where the money has been going in the recent years. We see in the top line that many Medicare or value-based startups have attracted a lot of investment. At the same time, some of the top line companies have seen a correction in their valuation, and they're facing challenges for which maybe the next wave of startups in the space can learn to avoid. A good example of this could be Accolade, which IPO'd at a unicorn valuation, and now it's around 800 million market cap. And the reason for that is maybe they lost one of their biggest customers, and they didn't match expectations. But I'm sure there's something there that we can learn more from in the roundtable too. Also, we see at the bottom some of the new trends coming into the picture. So Future Family and Headway, for example, are both financial services and marketplace startups, which are solidly growing and attracting more capital. So companies aiming to address the shortcomings of insurance products have to be very deliberate about the initial build required to launch a viable solution, given state and federal regulations, as well as the non-trivial capital reserves to launch a company in this space. So finally, we move to the next slide. I just wanted to show a couple of strategic partnerships that have happened in the space recently. First of all, Brella and Nationwide. Brella provides employee benefits administration platform. We have her with us today. Nationwide provides a full range of insurance and financial services products, including outbound business. And the goal of this partnership is supposed to be to deliver a cost-effective supplemental health insurance plan that pays out upon diagnostics and offers benefits for covered conditions with no accident or hospitalization requirements. I'm sure we can go deeper into this later. We also have more strategic partnerships, mainly focused in the Asian market, which we can see in the next slide. There you go. So Sompo and Reinsurance Group of America have entered a partnership in Japan to leverage their experience in elder care and aging-related insights and robust data assets to improve the health outcome and financial securities. So movement in Asia, and finally, yet another strategic partnership in Asia, which involves one of the main insurance companies, Prudential PLC and Google Cloud, which basically aim to enhance health and financial inclusion for communities across Asia and Africa. We see, other than these are the most recent strategic partnerships. Well, we saw maybe last year PayPal acquiring Paydi in Japan, so more movement in Asia. Payzen in conversations with MasterCard regarding moving into the Indian market. So there's some movement in Asia, maybe not so much in the US or yet not so much in the US, but also something that maybe we can hear more about in the roundtable. This is all on my side. Thanks a lot.
All right, thank you so much, Andres. Appreciate it. Appreciate that overview. There's a lot of movement in that space. And so we're going to drill down into it and hear from our panelists today. So I'd like to invite them all to the stage. Veer Gidwani is CEO of Brella. PJ Santoro is CTO and co-founder of Peachy Patients, and Mike Vian is CEO of Wallet. So if you all could turn on your video and join me, that would be fantastic. And we'll just get right into it. All right, great. Fantastic. So I think what I'd like to do is really start out with some kind of description of exactly what you guys are working on. Vera, if you don't mind, I'm going to start with you. If you can share some insights on the problems that you're seeing in managing health expenses and how Brella is addressing that and aiming to solve those issues.
Sure. Well, thank you, Jennifer, and happy to be here. Thanks everyone for making the time to be a part of this discussion today. The mission for Brella is to make sure that health distress doesn't lead to financial distress. And the unfortunate reality, I think most of us understand now, is it's frequently in the news, or in many cases we may know people who struggle with this. But most Americans really can't afford to have a severe or unexpected health event, mainly because the out-of-pocket exposure they have in a typical health plan is just beyond what most people have in savings available to them. And so our aim at Brella is to build an insurance product to solve that problem. And as Andreas noted, work with a coalition of partners, other insurance carriers, to bring that product to market. So that's what Brella's up to. Thank you.
Awesome. Great. I want to drill down on some of the things you talked about too, but I'm going to move over to PJ for a second. PJ, so paying medical bills is obviously a huge consumer burden. Can you talk and explain why Peachy Patients is helping patients do that?
Yeah, of course. And thanks for having us. Number one, our goal is to educate, empower, and enable patients. The healthcare system today is typically stacked against the ultimate payer, who is the consumer and the patient. And we truly believe that at the end of the day, the patient is paying for most of these. And when it comes to medical bills and understanding coverage for health plans and what you're actually paying for, it's a black box. And us at Peachy Patients, that's what we're trying to do. We're trying to decipher and translate that box so it's human readable and the patients understand what they're paying for and why, make it very clear. And if it's not clear, or if it's just wrong, we help patients fix that as well.
Awesome. Great. And then on the topic of payments and managing money, Mike, can you explain why we all need a digital wallet for the modern workplace?
Absolutely. Hi, Jennifer. Thanks. Hi, everybody. We need one because we've got about 160 million Americans in the United States that rely on their employer to get the benefits that they need, like health insurance and dental and vision and so much more. And then there's actually another 50 million or so that are considered independent workers, and they actually aren't even eligible or don't even receive benefits. And at the same time, we're spending as a industry about $4 trillion every year on benefits to attract and retain these people. But it's just not working. I mean, and if you think about the benefits experience at your own companies, it's fragmented. It's very complex. Insurance is not easy. The healthcare is not easy to navigate, as everybody on the panel knows. And the battle to attract and retain talent for companies has never been tougher. And I won't even get into that, but we could spend the rest of the afternoon talking about that. So we're bringing fintech to the benefits and insurance industry to help streamline that friction. And a lot of it's inertia. And so when we can remove that friction and remove that inertia, then we think we are making some significant headway.
Awesome. I do want to get into attracting talent, because I think that is an important part of it. And I'll pin that and do it in just a second. But I wanted to get back to Veer and talk maybe about some of the, sort of the fundamental problems, like an out-of-pocket expense, which is so incredibly high. Why is that? What are they right now? And why are they so high?
Well, let's address the what first, and to put some context around it. I mean, if you look back to 30 years ago, the mid-90s, and track the inflation that's existed around deductibles, premiums, and household income, you see a very disturbing picture. So on the one hand, deductibles have gone up by close to 800% over the last 30 years. On the other hand, premiums have gone up by about 300%, both of which are staggeringly high numbers. But to really top it off and to illustrate the problem is household income has gone up by about 20%. And so therein lies the issue. And if you dig into that a bit more, and many of us have read about this, millions of Americans have medical debt. Millions of Americans run GoFundMe campaigns to fund medical bills. And 60% of the country can't afford an out-of-pocket expenditure of more than $1,000. And that's largely true because of those percentages that I outlined over the last 30 years. And if you look at the current, average deductible for a single, it's about $2,000. For a family, it's getting close to $4,000. So the math just doesn't square up anymore. And this has been a problem that's progressively getting worse year by year. To your question of what's caused it and why is this happening, similar to what Mike said, we could probably spend the afternoon talking about it. But at the end of the day, it has to do with the fact that healthcare is too expensive. And as PJ rightly pointed out, at the end of it, that ultimately is a cost borne by people, right? And the figures that I outlined really just sort of illustrate that at its extreme.
Right, great. So PJ, then I'm going to pass it over to you. So we have these like huge out of pockets, huge expenses, huge bills that have gone up way beyond what we can pay. I guess the statistic is that personal bankruptcy, one of the highest drivers of personal bankruptcy is medical debt, right? So what are you doing to allow patients to pay that bill, or how do you get them to manage that properly in this environment that Veer just laid out, which is almost untenable?
Yeah, absolutely. And we totally agree with Veer. And deductibles are out of control. And if you look at the average deductible, it is like way more than people have in savings. So it's not something that people can afford throughout the year. So it's almost like the health plan becomes unsustainable at that point. So we take a look at just the out-of-pocket costs, like what is the patient expected to pay? And then we started looking at the rate of errors and the rate of issues with just medical bills. So there's figures out there, and on the high end, it's like 80% of medical bills contain some form of error or issue with that bill, which is just, it's incredible when you think about the amount of bills that are paid by patients. So that amount is a huge opportunity for us. And we took a look at that. We said, all right, what are the most common errors that are in bills? And we just started laying them out, and they're not very complicated, but to the patient, even to like an average person in health tech or in healthcare, you don't know what they look like. They can easily just slip through in the bill. And sometimes if they're in the bill and you don't require, or you don't ask for an itemized bill, you would never know that these things exist. So we just take a look at the bill at a deeper level. And we apply this as a service to our patients to really take a look at any errors that are contained in these bills and make sure that they're resolved. And the bill is priced fairly for the patient.
Got it. It's going to make 80% is going to make me take a closer look the next time I get a bill for sure. Mike, let's start with you when we talk about target audience. So you guys are all sort of looking at different audiences. Who are you targeting and how do you reach the customer?
Yeah, so we to your earlier comment, we think that everybody should have a digital wallet to manage their health, their wealth, and their wellness. But it's hard to reach everyone. We typically we have a channel strategy of going through brokerage agencies, insurance agencies, and through carriers as opposed to direct to the employer. And then, the adoption of the digital wallet is extremely high. It's north of 95% across our customer base, because what companies are doing is they're funding their team's wallets. They're sponsoring it and funding it and making it available to them so they can choose freely the benefits that matter to them and their families. So that could be, I need it for medical, I need it for vision or dental, I need it for even my pet. You can get care, you can get coverage, but you can also use it to pay claims, and manage expenses. So you can imagine when you remove that friction and you put some money in people's wallets, then it becomes a lot easier to be able to use it for. And I agree with everything that everybody's saying. I mean, I think, healthcare debt is widely recognized, and it's a huge challenge. And then you start thinking about like people with chronic illness, and that's nearly half the population, and it will be by, in like 3 years. So, a lot of times companies are finding us because this is such a systemic issue. They're Googling these terms, and we're the first and digital wallet for the workplace to drive wellness.
Cool. So does the employer have to sort of purchase the digital wallet? Can the consumer get one on their own?
I love that question. I love that one. So it depends on the size of the company and the segment, right? So we actually have the very first no bill or no administration program for small businesses. So if you're a business or a team under, say, 25, 30 employees, there's absolutely no cost to you, the company, or no cost to you, the employee. There's never a cost to the end user. But we want to make this widely available. And again, to our mission and vision to have everybody have a digital wallet, we want to make it available to employers that are small because they need it the most. They have the same challenges of attracting talent and retaining talent and delivering benefits to them. So we make that available for free. As you're looking for more customization and more bells and whistles, then we have a paid subscription plan for employers to pay for. But that's largely it. It's very simple. And we built a meter billing system. So we actually only charge companies for people that are using it. So if you have, say, a 100-person company and only 20 people using it in a given month, we only charge for the 20, not the 100.
Got it. And you're specifically targeting 1099 employees, right?
No, actually, no. So we love the 1099s because, again, they're often, they don't have the benefits. They don't have the expense reimbursement capabilities. So blue collar, white collar, W-2 and 1099, but we have an affection for those independent workers.
Got it. Okay. Yeah, because gig economy workers or 1099 workers are definitely ones that not only may not have the coverage they need, but also no guidance on that, right?
It's exactly, they're out in the wilderness by themselves. So they have the flexibility, but to work how and when they want, but they don't have the benefits that, paid time off, expense reimbursement, health. It's hard. They have to go out and do it themselves. And so,
got it. Cool. And then Veer, who is your target audience? Who are you going after?
Everybody who has a medical plan. Per the data I shared earlier on, this is a problem that virtually all Americans face. So as long as you have health insurance, then you need a supplemental health insurance policy. Now today we most people buy their health care via their employer. So that's where our focus is today, and employers of all sizes.
Got it. And maybe Andres talked about the nationwide partnership that you have. Maybe if you could use that as an example for everybody to talk about how you're working with them.
Sure. Well, why don't I maybe just step back and take a minute and give you a tiny bit of context. So, given the out-of-pocket exposure that people face around their health insurance, no question, what PJ's company is solving to get that bill accurate matters. What Mike's doing to make sure that, it's easy and straightforward to pay that also matters. At the end of the day, though, at some point, a bill's getting paid. And if people don't have the money to pay it, then there's an open question of how they're going to be able to pay the bill. Our thinking that there's an insurance product that can be designed to help solve this problem is sort of central to what we're up to. And the general belief here at Brella is that a loss ratio, conceptually, often creates the wrong kind of behavior, because an insurance company is trying to minimize loss. And, I guess that naturally makes sense. But in the context of insurance, the loss ratio is the flip side of the coin of the value ratio to that person. So reducing the value ratio seems very counterintuitive. So the basic problem we've solved is we've built a supplemental insurance product that has a much higher value ratio to the consumer. And in doing that, we're, in our view, carving out a brand new space for supplemental insurance. The primary leader in this space today, and the company that pioneered supplemental insurance, is Aflac, and about 40 to 50 other carriers offer products that are basically identical to Aflac's products. And what makes them all similar is that they generally have low value to the consumer. So what we are doing in partnering with carriers like Nationwide is saying, look, if you believe in our view of what supplemental insurance should be, then we'd like to partner with you to bring that product to market. So with Nationwide, and we're doing this with others, the nature of the relationship is where the product is there. So they have Nationwide Provide that is filed on their paper. They're the primary risk bearer of that product. It runs on the platform that Brella has designed. And they've constructed this insurance product with our expertise. And we work together to bring it to market, primarily with their leadership to go through the channels that Nationwide has. We announced yesterday our relationship with Symetra, and we have a number of others that we'll talk about in the coming quarters. But that's the nature of it. And a fair question of why would you work with potential competitors to make this market happen? And the thinking there is that there's a lot of people who need this problem solved right now, not in 10 years. So our question is, how do we go after that market as fast as possible, and aligning ourselves with carriers that have established brands, reputations, distribution channels, and a similar objective to ultimately solve this problem is a strong way for all of us to bring a better product to the market.
So if you're an employee of a certain company and Nationwide is the insurance, do you automatically get access to the supplemental benefit that Brella brings?
So Nationwide sells many products. So as an employer, you'd have to want to offer your employees Nationwide Provide. But assuming that's the case, then yes. And in many instances, and one of the things that has really stood out in our product and sort of demonstrate the difference versus the incumbents is that in many cases, more than half employers are willing to fund Brella, which is almost unheard of amongst the incumbent products. And when that happens, the employee is not paying for their supplemental insurance product at all.
That's awesome.
Got it. And that's on the that also is part of the conversation about the employee and how they're driving things. And I'm going to come back to that in 1 second, but wanted to go over to PJ to talk about your target audience for a minute, PJ.
Yeah, so our target audience, we're 100% patient focused at the time. And our first product actually was a provider product. So it was very similar to like a lot of these digital bill pay solutions that are out there. We made the flip to the patient side just because we realized that the value that we were providing through a patient product was not direct to the patient. So we are 100% patient focused right now. We make sure that we go direct to the patient for signups. We're utilizing employer channels to kind of take a page out of the consumer playbook and like go to where your users are. We went to where users were getting their health insurance, and we said, okay, let's offer this as a free benefit to employers to onboard these users at a faster rate. With that said, though, the groups of users that are getting the most value out of a product like ours are kind of like people that are interacting with the healthcare system, very intensely. So it's a lot of new families, new moms, new dads, chronic illness patients, obviously, and then also underserved communities. So we know that medical debt thrives in a lot of these underserved communities. And we know that a lot of these communities do not understand what they're paying for, understand the bills, or even 1099 employees or employees without benefits, they may be paying cash and not completely understanding that these cash rates are highly negotiable. Right. So there's huge value for these communities. And so instead of saying direct to consumer, like a lot of telehealth companies or a lot of the medication companies that came out recently are saying, we're saying direct to community. And those are really our focus groups.
That's very cool. How do you actually reach a community though? Like, I could see how you could reach new families via OBGYNs, moms who are pregnant, but how would you reach an underserved community?
Yeah, so it's actually amazing. We just started this process like a few months ago, and we've been scouring social media and places like Reddit, and these communities exist. Like there are full subreddits that exist, and they're looking for people to review their medical bills, or they're talking about this debt that they have, or a collections agency that's hounding them. So these communities already exist, and we're starting to tap into them now. Like you said, there's also a huge opportunity for partnerships with other apps that work in that community. So a lot of the pregnancy apps or new mom, new dad apps, also financial, just like personal finance apps are a really good place as well.
Got it. Excellent. So let's go back to talk about the employees, because I know Mike and Veer, you can expand on that a little bit. It's harder and harder to find talent. It's harder and harder to keep talent. And Veer, now you're finding that, the employee, really is aware of the product, right? And some of the employers are coming directly to you. Maybe start with Mike and talk about, how talent is driving new decisions.
I'm sorry, Jennifer, can you rephrase that?
Sure. Just, saying like you have an employee who might get access to the wallet, right? The digital wallet, and it's something they want, and it's so hard to keep talent. How are your products sort of attracting employees or attracting talent to keep them happy at an employer?
Yeah, so I think retention is the biggest part, and word of mouth too. I mean, there's this adhesion. Like I think about the time when the last job that you had where you were all excited about your new opportunity, meeting your team, and you went through that onboarding exercise, and you had your insurance over here, your 401k over there, you had your payroll, and everything's all scattered all over the place. Well, we streamline everything because now we have a single pane of glass for everybody to have access to those things. So we say, Jennifer, welcome to the team. Here's your wallet. You have access to your payroll and access to pay for and receive benefits. We reward and recognize you and your team for special achievements. There's a product for incentives in here. And you're basically using this to manage your everyday spending. So, and with the allowance, we have this lifestyle spending account where teams are getting funded for the things that they need to go out and get in the open market. So yes, we have a marketplace inside the wallet that's highly curated and personalized to each individual person. But the best part about this is that you can get the care that you need no matter what across all these different categories. So when you have access to that, it's easy. So say, for example, one worker might have a high, college loan that they have to pay off, and they can use the allowance for that. Or maybe somebody needs fertility benefits, or there's childcare and you don't know how to do it. Maybe you're using a center, or maybe you just want to pay your babysitter. Literally, it's completely and fully personalized. So it makes it very hard to leave when you have those benefits, assuming that you've got a good manager, right? There's no solution for bad managers, but
it's like a new HSA, right? So,
I built Fidelity's HSA.
Yeah.
And but just like that, without the government restrictions, and you can use it for everything. Yeah.
Very cool. So hopefully people will be asking for it by name.
I hope so. Yeah. After seeing this video, I'm sure they will, right? This webinar.
And Veer, so I wanted to go back and talk about something you had just mentioned about employers coming directly to you. Clearly, that's because they want to attract and keep talent. And if they have an extra benefit that is attractive, that helps them.
Yeah, very much so. I mean, if you look at, the most employers, their number one expenditure is wages, and their number two expenditure is benefits, which is, just another form of a wage, essentially. And those benefits are a larger and larger percentage, right? I mean, CEOs across the country are continually flummoxed by the percentage at which their benefits costs are going up, which are largely driven by health insurance premium inflation. So, the convergence of wealth and health have come together, figuratively, yes, of course, if you're healthy, you're wealthy. But I think, practically the reasons these have come together is the cost of health is taking up such a big portion of your primary generator of wealth, which is your income. So it's almost impossible to separate the two of them. So to Mike's point, a good benefits plan really matters. But I think what people are more and more realizing is that even with pretty good health insurance, they still have exposure that's beyond what they can afford. So it's incumbent upon employers to come up with solutions to those problems. We mentioned HSAs briefly. Clearly, that's been a part of the solution for a number of years. It probably will continue to be, so long as it's tax advantage in the way that it is. But there are other financial vehicles to be using to address the problem. And the better that you can do that as an employer, I think it just gives you an extra chip to put on the table to retain and attract folks.
Absolutely. Very cool. And PJ, I wanted to maybe shift over to you to actually talk about a real live example where you've actually helped somebody reduce their costs. Can you give us an example there?
Yeah, of course. And I love using this example because it was very easy for us, and it just shows kind of how quickly we can reproduce something like this for many patients that receive bills. We received an echocardiogram bill for a patient, and there was nothing wrong with it. It was completely accurate in terms of like the pricing that the hospital offered for an echocardiogram. Health plan covered it, and the discounted rate was accurate. What was really interesting though is that the price variance of an echocardiogram is huge. It can range from like several $100s in a cash pay scenario to $18,000 for a contracted rate with a plan. And we just took a look at this, and we said, it's much higher than it should be. I think it was like $14,000 top line. And we said the Medicare rate's $500. So we simply crafted a letter like we do for a lot of our negotiations and disputes. And we just referenced these numbers. We sent it off to the hospital, and like immediately it's like a 30% discount on the bill. And this is very common, where a lot of hospitals, if they receive almost any pushback with a relatively good case, they will discount, of course, because they want to get paid fast and as much as possible. Anything is better than sending that bill to collections and getting pennies on the dollar. But that was a really good use case, because it took us about 20 minutes of time to get that 30% discount for the patient. And then I think it's even going to get discounted further in the future with some more time and some more back and forths. That's amazing. And does a patient have to be like a member of PC Patients, or how would they access you? Can you just one time say, hey, I've heard of this and I have this massive bill and I need help negotiating it down, and they come to you? Yeah, so we have 2 channels in the app right now, and signing up to be a Peachy user is very easy, peachypatients.com, and you can sign up in about 2 or 3 minutes. We require basic information to allow us to facilitate payment of some of these bills. And then as a user, when you come in, you have 2 options. You can just upload the bill and ask us for a review, and we'll help you out. And that feature is called Peachy Pal. The other feature is we let you pay a medical bill for any provider. So very different from the patient portals or payment portals that exist out there today that are very specific to a provider, health system, or medical group. We let you pay for any provider. So if you have a bill that you received in the mail or a bill that came in to your patient portal, you can simply take a screenshot or take a photo with your phone, upload it, and we'll pay it. And in that same flow, that bill pay flow, you can just check a box and say, hey, please review this bill for me to make sure it's accurate. Wow. That's amazing. And the model is that if you reduce the bill, then you would take a percentage of it, right? But it's still like a drastically reduced bill. That's right. Yeah. So there's no upfront fee. There's no, subscription for the patient. It's simply, if you ask us to review the bill and use Peachy Pal, and we are successful in reducing that bill amount, we'll take a percentage of that bill, and that percentage varies a little bit, but we'll take a percentage of that bill as a success fee. So you'll still receive a large portion of those savings. Got it. Very cool. Mike, want to move on to you. Can you give a success story?
Yeah, we've got lots of them. I mean, we're on 2 levels, right? We're helping the employee get the benefits and the care that they need. But for the employer, which I think is the nature of this question, we're streamlining and automating a lot of their manual functions in their back office for finance and accounting for one, and for HR two. You think about how fragmented all these services are across that whole spectrum of benefits, capital B. And so one really good one that we like is the one we weren't even anticipating as much. It's that we have an expense reimbursement product here. So and it supports our lifestyle spending account and rewards and recognition product as well. But we have companies that are, using Wallet for either replacing their existing expense management system, or they have a very manual process, right? They're using spreadsheets and it's all done maybe through email. And one of our customers was doing, this is during the pandemic, so it was even at their height, they were processing around 300 expense reports every single month. And they estimated that their cost to support that reconciliation, going back and processing the payments, was about $20 to $25 per report. So saving in the magnitude of like $200,000 a year just on manual process improvements is one. And then you think about how like all these different benefits are scattered all over the place, and most of the benefits go unused, right? I mean, I think, EAP programs, employee assistance programs, and different benefits are one size fits some, and no one's using it, but the companies are paying for it. So with Wallet, you don't have to get rid of, you still can make those programs available to your staff, but you don't have to bear the burden of paying for them directly. And so, tons and tons of different opportunities for the employer to save using the service.
That's fantastic. And then still with that example, is it the smaller to mid-size employer that really can see the benefit?
Yeah, we're focused on
don't have that, maybe the HR, the back office to manage, all the transactions. Okay.
Yeah, that's correct. Yeah.
Very cool. All right, cool. And then Veer, can you give your favorite success story with Brella?
They happen every single day. What makes the umbrella product unique is that we cover thousands of conditions, and those conditions are specifically tied to diagnostic codes. And every medical encounter, anytime you go to the hospital, has a diagnostic code assigned to it, and we cover thousands of diagnostic codes. So it's very clear when umbrella payout will happen. What happens every single day here is that when we receive a medical claims feed from an employer or health insurer or their third-party administrator, we have the ability to proactively pay out claims without our umbrella member doing anything. So imagine the conversation where you can phone someone and say, "Hey, I'm really sorry about the tough medical situation you're going through, but I want you to know that as a umbrella member, your benefit is available to you. And good news, we've sent $1,000 to your Venmo account, and we hope that it helps you in your path to recovery." That happens every single day at umbrella. And it creates a situation where obviously the experience is great, but more importantly, this person's getting money right now that they maybe even weren't expecting, that they can use immediately to help them, solve the problems that they're trying to get through in their life.
That's amazing. I think that's going to become a more and more in-demand service that employers have to offer. That's awesome. We're wrapping up here. I just want to ask you guys whether you're raising right now. Let's start with PJ.
We are. We actually kicked off our seed raise about 3 weeks ago. So we're in the middle of it, or hopefully tail end of it. So we're actively raising. So we are open to conversations.
Awesome. Good. And I'll have each of you after this put your contact info in the chat if you would too. And how about you, Mike? Are you raising now?
We are. It's the same with PJ at PG. Actively raising. We already started taking in some investments. We're circling some investors. We're raising $2 million on a convertible note. It's a seed round. Prior to this, we raised a small friends and family like $300K, and most of this has been bootstrapped. Lean and mean team.
Got it. Awesome. Congratulations. And how about you, Vera?
I'd say lean and nice, Mike. From what I can tell, you seem like a pleasant guy. On our, I think any entrepreneur will tell you that they're always raising capital. We raised our Series A last spring, and we have great investors, plug and play included, but also a number of insurance carriers that we're partnered with, our investors, Umbrella as well. So we're always open to talking to investors who believe in our mission and want to be a part of what we're building here.
Fantastic. And then I have a last question for you all, sort of could be controversial, but what else needs to happen so that in concert with what you're doing and your amazing efforts, the U.S. can significantly reduce consumer debt from healthcare expenses? Why don't we start with you, Veer?
Well, let's unpack that a little bit. I mean, if we're going to reduce consumer debt, then we need to reduce the cost. And I think it's no fluke that the system that happens to be the only privately run system is also the most expensive system in the world. That's not coincidental. Every other country, and certainly every other developed country, is for the most part a single payer publicly run healthcare system. So my personal opinion, which does not reflect Brella's opinion, but my personal opinion is that we probably need a single payer system at some point. To the extent to which that's going to happen, we'll see. But in the meantime, companies like ours all here are going to work on making the current system work as well as it can.
Well, you have one vote there in the chat, so that's good. I'm sure you have many others. And given the statistics you gave earlier, if it keeps increasing at that type of rate, absolutely no one will be able to afford healthcare anyway. So We'll have to do something drastic. Mike, what about you? What do you think? What else needs to happen in concert with what Wallet is doing and Brella and Peachy?
We don't have enough time here, but I think the one like you called out earlier, I just have this issue with people that are independent workers, 1099s, contingent workforce that don't have eligible benefits. Some states are already trying to take strides to do that. You guys may be familiar with the California Assembly Bill, AB 5, that's trying to, that's legislation that's making it so that gig workers are on this level playing field with W-2. It changes things, there's pros and cons, but I really think that you've got this massive and growing population that wants flexible work and they want flexible benefits. So I'd like to see that segment of the market get addressed.
Great, awesome. And then PJ, rounding it out.
Yeah, I think a lot of the trends that are already happening that are going to lead to true consumerization of healthcare, where we have a free market and we're able to see prices and we're able to choose, providers based on quality. Those are all kind of the goal of the system. And I think price transparency, a lot of the legislation that's passed recently around like surprise bills, balance billing, accessing payer data, like patient authorized payer data, those are all very important. It's backwards because we're obviously like getting assigned a bill with almost no visibility into it, but we're hoping that it does start to go the way of the consumer and we can actually start to shop for healthcare and choose who is providing care based on quality and price.
I love that answer. I think that's spot on.
Yep, awesome. It is amazing that we can't shop and we don't know the prices of any of these
It's coming.
very important procedures. Yeah, it is coming. All right, cool. I want to this is fantastic. Thank you guys so much. Amazing efforts that you have. And I want to get to some of the questions because we do have a few more minutes. So here's the first one. It says, you all have incredible solutions. Have any of you worked together to combine efforts to support your target populations in any capacity? And I think they mean not just together with you guys, but with other, like-minded companies.
I hope it's this group because I've really been impressed with these guys and I love their products, and our whole thing is a hub and spoke model. So I can absolutely see both products being very complementary to what we're doing. And I'm reaching out to both of these guys after this webinar. So.
Yeah. And I think Veer nailed it earlier, where we agree. We think it's totally fine to work with competitors and solve this giant problem. We always joke like healthcare is a giant TAM. Maybe, it's the biggest TAM. There's a lot of room and a lot of problems to solve. And I don't think any one of us will be able to do it alone. So we certainly need to partner up and fix this problem together.
I have to layer on to this too, because this has been my issues as an entrepreneur for a couple decades now. One of my biggest issues is you meet these incredible entrepreneurs, the founders, and then their teams, and everybody's in their own silo trying to paint their spot on this massive elephant, this giant healthcare TAM or whatever industry. I do think that there needs to be more collaboration across the board. Can you imagine if you brought these companies together? And that's a big spirit of what we're trying to do at Wallet, this hub and spoke platform to do that. I think that's a fantastic question. And I think VCs should be the champions and ambassadors to that because they have these theses, they bring these companies together, but it's a loose federation of effort. And I think it needs to be more structured.
Very cool. Thanks, you both. Veer, any comments on that one? You're already working with your competitor.
I'll agree. It's core to our approach to this problem.
Awesome. Here's the next question. What are the panelist companies doing to reduce overall spend on healthcare at the country versus the consumer level? That's the big one.
I mean, I'll hop in. Nothing. I mean, fundamentally, our company is not doing anything to reduce the overall spend of healthcare. We are very laser focused on making sure that when you have that bill, you can pay it because you have the money to do it. Yeah. Now, I don't want to, I think it's important for all of us, to Mike's point, painting a patch on the elephant is difficult when you're not collaborating. But on the flip side, especially when you are collaborating, being really laser focused matters. And that's what we're trying to do. At some point in time, I hope the problem we're solving is not worth solving. That would be victory for us. And like I said earlier on, I think that there's a much more fundamental set of solutions that's going to drive that. But being perfectly honest, we're not trying to reduce the cost of care. We're just trying to make sure that you can afford it when something happens to you.
I mean, it is a massive undertaking that it seems like one company could, not have too much of a dent in. What about Mike or PJ?
Well, yeah, I mean, I think obviously it sounds like all of us are trying to find ways to make it more affordable, both the coverage and, the day-to-day expenses. But I also think that some of the things that we're starting to really dip into is helping companies. It's just structurally challenging. And so most companies are, and I use that term loosely, they're fully insured plans. And so we're helping companies be more self-funded plans because there's more flexibility than the traditional fully insured plans, but there's also a little bit more risk. But when you do that, you actually can bring down the cost of care. And I think we're starting to see a trend there, and I'm very interested in that. And so people are still getting the coverage. Insurance carriers are still selling their insurance. It's just a different model.
Got it. PJ, I think I'm going to ask you this next question, and then you can answer the other one as well. PG has been vocal regarding partnering with so-called competitors in order to better serve patients. What would be a dream partnership for a major leap in patient acquisition for you?
Yeah. I think the first question, we're totally focused on the consumer level. Part of solving this at a country level is really building transparency into the system, because typically in the system, if a price drops somewhere, that price is going to find its way to increase somewhere else. And that's typically what we find. So if we can do it at the consumer level and start to drive transparency against, like unethical practices or things that are happening behind the scenes, that should have an overall impact at the country level. For a competitor, for partners though, like our CEO Lex, who Veer, your number one fan in the chat, she is obsessed with the ZocDoc story, and I think we've all become in the company, and ZocDoc would be a huge partnership for us, just because they're very like patient first approach, and then they kind of backed into providers, and the other one is GoodRx. Really anybody that's helping the consumer save money and time, and kind of like removing those admin processes that exist and removing stress from the system.
Got it. Very cool. And then the final question is for you, Veer. Brella shares space with other players that are facing non-minor challenges. What lessons could be learned from some of these companies that have faced downturns, such as Oscar, Accolade, and so on? I think that's from Andres, referring to some of the, the down valuations he was talking about.
I'm in no spot to poke anything at those companies that have done incredible things to innovate in this space, and in many ways have sort of paved the opportunity for other companies to come along. Just more broadly, though, to answer the question, I do think that, and we've talked about it here quite a bit, that and I say this to our team often: when you step back and you look at just insurers as an example, the same thing applies to pharmaceutical companies, providers. These companies have been around for decades. And while we can poke fun at them at the things they don't do well today or could do better, yes, I think all companies would agree they could be doing something better. But given the system in which they're operating in, they've found a way to survive and to thrive and to serve millions of people every single day. Now, I think assuming that they've got it all wrong is probably the wrong approach. And to find ways to collaborate, generally speaking, feels like a really good idea. And I think to that end, if you've got a mission that is clear, that you believe in, you don't have to convince everyone to partner with you. You just need to find the folks that are wanting to and want to in a way that's meaningful. And to Mike's point earlier on, I think being very clear about that, being open about it, is really key. It would seem like if you look at a company like Nationwide, why on earth would they partner with Brella? They're competitive to some degree, but when you sit down with their leaders there and discuss what they're trying to accomplish, you realize there's far more that's in common than not, and that creates opportunities to do something better together.
Right. Awesome. So we'll end on that collaboration note, but thank you all. And then we have a quick poll that's going to pop up too, if anyone wants to get in touch with Wallet, Peachy, or Brella. We'll have that poll pop up hopefully in a second, but thanks again, Mike and Veer and PJ, and we're so appreciative of the time you took today, and we're so impressed by all your efforts, and we wish you the best of luck. Thanks again.
Jennifer. Thanks for having us.
Yep.
Thank you.
Our pleasure.